Welcome to Wall Street Confidential. I'm Aaron Task, joining in with Jim Cramer. And Jim, market's getting a modest lift today, predominantly, I would think, because of all the M&A activity we're seeing.
Yeah, definitely. I mean, you're seeing the kind of M&A activity that just says, wait a second, I hated the paper stocks. Darn it all, look at them. Wait a second, these online education stocks have been a gigantic disappointment. Well, geez, maybe they're more interesting than we thought. Aren't banks supposed to be bad at this point of the cycle? Bristol Myers, I thought that was a dead company. So, I mean, all of these are igniting previously dead sectors.
Right, let's talk about a little bit about the individual sectors here. Laureate Education, you mentioned education.
I like the Laureate because what that says is management says, look, I'll take private equity money. My stock is clearly undervalued because of some government investigations in my industry. He had already gotten the clean bill of health. He was the first one to get the clean bill of health on his company. And they also have a very big Latin American division that no one's focused on. They weren't getting any credit on their Latin American division. So I just figured that management went to private equity and just said, listen, I know this company's big. I also know it's big in Latin America. So let's just own it. And then 3 years from now, maybe people will be able to, we can bring public Latin and bring public American.
Right. Well, this is the bigger issue I want to talk to you about today. It seems like a lot of managements want to take the private equity money. Some shareholders are starting to push back a little bit, saying, "Well, if there's value here, why should I sell out right now? Why doesn't the current management bring out the same kind of value the private equity guys think they can do?"
I think that that's true. I think that what the hedge funds are going after are companies that are not secular growers that generate a lot of cash, and the hedge funds are right to militate against management. The only issue is, and why I'm less sympathetic to the hedge funds is that there are a lot of industries where there's just good and bad times. And, I really don't want to own the equity or the bonds of a company that gets into bad times. But the hedge funds don't care because they're not out there to do anything other than create value for the shareholders. Not every company should be LBO'd. I know there's talk, for instance, I think Gap is a legitimate LBO because they have to take a hit. They have to close 500 stores. They have to bury their earnings for 3 straight quarters. If you have a company that can't do publicly what it can do privately, then I'm all over it from a point of view of private equity. But some of these companies, no matter what they did privately or publicly, can't really pump their value up.
Right. Well, let's talk about it a little bit more for the viewers out there who maybe aren't as familiar. What can companies do privately they can't do publicly? Why is there this big push?
Let's use the Gap example. Gap has consistently tried, even though it's failed, to make street estimates. What it really needs to do, it's got thousands of stores, is to take a hard look at maybe 500, maybe 1,000 stores have to go. They have long-term leases that are below value from what we'd have. But that would just be catastrophic for the earnings of the company over the period of 2 years. I think they
horrible
missed their
publicity
quarters.
too, because they'd have to lay off tons of people.
So nobody would really want that to happen as a public company. As a private company, you have so much more flexibility and are much less beholden to Wall Street for coverage and for sponsorship. So, Gap would work. So would Home Depot, for that matter.
I was going to ask you about Home Depot. It's another name that comes up a lot.
Yeah, well, any company that can't take the medicine publicly, and I think that people don't understand, maybe a lot of our viewers don't understand, but when you're running a company, a lot of what you would want to do to the company is, if you had your druthers, is totally unpalatable to the public markets. Well, we got to close this division and that division, even though we told people that they were good divisions. We have to go back on our promise here or there, or the street's going to really avenge what we do. And I think people don't understand. When you have those situations, you really don't want to be in the glare. And yet those are really, really good things longer term. So if you are willing to collapse your earnings for 3 years to get your company where it is, that is ideal for private equity.
Okay. And on the flip side, there seems to be, though, more management these days who don't want to take the buyout. We have, news that U.S. Airways may up a bit for Delta, but the Delta management doesn't want to have any part of that. And Ted Reed is saying that they basically won the PR battle. The Senate committee last week, there was nobody there who was pro-consolidation except the folks from Delta and the assistant Treasury Secretary.
Not everybody wants to lose their job.
Is that what it comes down to?
Yeah, I think that there's a notion that we can do it ourselves better. I don't think that's necessarily wrong. There are instances where people can do it themselves. There's also a lot of instances where people don't need to be private. But the payday for private I find as being very positive. I think that a lot of people are complaining, say, about Clear Channel. The Clear Channel's business is awful, okay? It's a no-growth business. They're trying to steal the company. But remember, my view is we're in a rapacious capitalist period, and management should try to steal the company. And you just have to hope that there's someone else on the other side who says you shouldn't steal it. But managements these days, there's no zebras, there's no referees.
Right.
If management wants to steal a good company, God love them.
Some people say the same about Cablevision. The Dolans are trying to steal that
Sure,
company.
they're trying to steal it. Well, why wouldn't you steal it? Why should you pay fair value? Because the law says you should? I mean, you hire a couple of bankers who are corrupt and they want the fee. I mean, this is real life. Remember, on TV, I would say, geez, obviously you'd like to give a fair shake to the shareholders. These guys don't care about the shareholders. They're just people who they can beat up on. They're not, there's no loyalty. This isn't like, well, I'm a Colts fan and the Colts should never have left Baltimore. I mean,
right.
There's no civic pride here.
Right, but if are the big Cablevision shareholders of the world and CCU shareholders of the world going to start saying, you know what, we're not going to let you steal our company.
I'll try to get an additional $1. I mean, that's fine.
But that's what it comes down to.
Maybe $1.50.
All right, one other thing I want to ask you about the M&A activity we've seen. So far this year, we haven't really, except for EOP, Equity Office Properties, there hasn't been a deal over $10 billion. Is the lack of a blockbuster deal, is that holding back sort of the public excitement about it?
I think the public is so not into the market this year. We just don't see a big inflow of capital. That has to change. Now, one of the things I should emphasize is that we're not seeing a big flow of capital because a lot of people think that the government, this is not in the day-to-day notion of the price-to-earnings ratio, but I think a lot of people are really fed up with our country. And the where the money's going is into other stock markets elsewhere. And I would encourage that. If you look at the White House, I mean, we're perceived as being a weak and hobbled country right now. And people don't want to necessarily invest in a weak and hobbled country. So if you joined where the other capital flows are going, you'd probably do better. Europe is not an unsafe place to invest. It's a better place to invest in us. They seem to have a better worldview. They've alienated fewer people. I am not a political guy. I could care less what Bush does. But at a certain point, he's starting to hurt the multiple.
Right.
And this guy's really starting to hurt the multiple.
So you don't believe in this notion that the U.S. stocks have now become fairly valued compared to international?
Well, the U.S. stocks lose favor the way that the president's poll ratings lose favor. Now, if I were a dyed-in-the-wool Republican or a Democrat, I would say, well, and that's great if you're a Democrat or Republican, it's untrue.
Right.
But you see, it's not untrue. The money's going somewhere, and it's not going somewhere because it's stupid.
All right, Jim, thanks very much. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.